All right, we are live for a Friday noon edition of the Mike and the Mario Show. My name is Mike, and that's Mario, and we're here to connect and to talk about current events from this past week and also what lies ahead in the future. So, welcome to the show, Mario. How you doing, my man?
I'm doing well, and you, Mike?
I'm doing excellent, my friend. Excellent, my friend. So I didn't mention to tell you, or I didn't mention this in prior chats, but yet this week it being my birthday week, I've turned it into a long celebration of life on this good planet here. So I'm just enjoying the moment, enjoying this Friday, looking forward to this weekend. So, but here we are. So. For those that are tuning in, feel free to hit that thumbs up button ahead of time. And if you don't mind, go ahead and share this video on your social media tab so people who may not be plugged in just yet can come and find out what's really going on, because you won't hear this type of information coming from the mainstream narrative, unfortunately. So only way you can get it is by going underground to alternative media sources for the truth. So Mario, appreciate you for joining us again on this Mike and Mario show. And so inflation numbers are out, and so I guess it is or it isn't transitory, or like Janet Yellen said that they can reel it in at any moment now type of thing. They got tools for this. What do you say there, Mario?
Well, yeah, they call it the Fed's favorite gauge of inflation because inflation really is the growth of the money supply. Mm-hmm. And we could see that prices were going to rise because last year the M1 data, M1 and M2 money supply went through the roof. Mm-hmm. So it's not surprising that we're seeing prices rise. The PCE is a measure that the Fed likes to look at of right. prices, and they look at the core PCE, which right. includes which doesn't include, I think, food and energy. For some reason, central bankers don't like to eat or move around.
Yeah,
good thing we don't need that. Yeah. So as you said, they're the highest since 1992, and that's the core number.
Yeah,
it was expected to rise by 2.9%, and it rose by 3.1. But the other thing as well, the headline number, the one that's not the core number, rose by 3.6 percent. The previous month it rose by 2.4%. So yes, it looks like the markets, especially bonds, believe in what the Fed are saying, because surprisingly, 10-year yields dropped today. The last I saw before we came on, it was down 2 basis points. I've been in the markets. I started out in the late 90s, and I was in the bond markets. I was a bond futures and options broker, and I even did cash bonds in the beginning. And I can tell you that in 1992, 93, 94, if we had CPI or PCE numbers like that, bond markets would have crashed. You would have seen the yields go through the roof. But nowadays, everything is upside down, probably because the Fed is out there probably buying bonds to keep rates at 1.6. So let's say the headline PCE, 3.6. If you invest in a 10-year note, you're getting 1.6%. So you're actually losing like 2% of your capital there.
So here's the thing. When it comes to the bond purchases, all the institutions, they're required to purchase those things for their investment vehicles. That's the primary. That was the primary purchaser of all those assets or liabilities in the past. But at this current moment going forward, with the Federal Reserve saying that there's not inflation, but they need inflation to kind of keep this thing from imploding on itself, what good is it for the average financial institution to actually buy bonds at this current moment?
Well, I think a lot of them are betting that rates are going to go lower. They believe in the Fed mantra of transitory.
Yeah.
And the other thing as well, like you said, a lot of pension funds, a lot of institutional investors who run funds for companies, for state, local authorities.
Yeah.
They're forced by regulations to only buy stocks and bonds.
Yeah.
So very few they think that buying physical gold and silver is risky. It's a commodity. So they put 60% of their assets in stocks and 40% in bonds generally, and they move that around a little bit. And also not everyone that buys a 10-year bond or 10-year note is looking to hold that for 10 years. So let's say the 10-year yield drops from 1.6 to 1%, that means the price is going to go up quite a bit.
Yeah.
So they can just sell it and make a profit on the principal. So yeah, and that's the reason. And I think the bond bull market has been going on for so long, and they've always managed to get yields back down that people are complacent. But one day I think it will turn.
Yeah.
But yeah.
So I think, and I mentioned this for quite some time now, that the 40-60 split was a part of the old system prior to it officially, not officially, but for those that are awake and aware, having actually died back in the great financial crises. And since then, investing itself has changed, in my personal opinion, because the world's been turned upside down when we're in an environment now where all this bad news can come out, or news that's not favorable, but yet the markets still react in a very favorable way, which just shows that the monetary twilight zone continues on while people are being sucked in still. And I actually did an article earlier. I should have brought this up, but I think it was Fidelity in the U.S. I'm not sure about globally. In the U.S., they are opening up their trading vehicles and saving accounts and whatnot for children. And so they are actually targeting children between, I think, 12 and 16. So parents can sign their kids up with an account, and I think either give them access to it so they can get in there and trade and speculate and gamble and whatnot. But when I saw Fidelity opens up kids trade, I'm like, huh? I'm thinking like, it says trading and investing platform. I'm thinking like, wow, first thing came out was gambling. Like they're trying to suck in the last bit of all this liquidity that's out here so that they can eventually pull the plug. But it is what it is. But, speaking of which, here's something from our article. Right after the numbers we just talked about, it says personal income actually decreased by 3.21 trillion or 13.1%, while personal consumption expenditures rose 0.5% to 80.3 billion. And so people are not making as much, but yet it seems like for some reason they're having the funds to spend. So assuming that stimulus stuff out there or what?
Yeah, that's it. It's the stimulus. It's all artificial. And the other thing we can jump a little bit onto Biden's $6 trillion man. The plan. Of course, it's probably not going to be passed exactly like Biden wants, but yes, it's going to make the economy look good. Deficit spending, because the deficit is government spending is part of the GDP equation. So the more the government spend, the more GDP goes up. But this is all Keynesian philosophy. I saw an article just this afternoon after the PCE data, and the FT, they've got a Keynesian mentality. They said inflation increases as the economy overheats. And I made a comment below that article, and I said, no, it's not the economy that's overheating, because people are not making things.
Yeah,
I said it's the Fed's printing press that's overheating.
Yeah,
because in a healthy economy, if the economy is growing well and people are producing things and making money, and there isn't any inflation because people are producing enough goods. The reason there is price rises, or inflation, as some people call it, is that there's too much artificial money out there. People are not producing enough.
Yeah.
So it's just too much money chasing too few goods.
Yeah. And speaking of, I'm trying to actually bring that up here so people can see what you're referring to here. So this the chart you're talking about right here? I mean,
that as well. In Europe, you see container freight rates are going up.
Yeah.
So that's going to be translated into consumer prices, producer prices, whatever these containers carry.
Yeah.
I saw that the PPI in Germany yesterday came out at over 10% year on year.
Yeah.
In March for April, and in March it was already 6.2%. So a producer price index, that's going to be passed on to the consumer as well. So in Europe, we have the same problem, even though there's still so many people out there who think we have deflation. I don't know. They must have their head up somewhere that I wouldn't want to put my head up.
Right. But watch this. Speaking to what you just mentioned a moment ago, as you were speaking about, GDP and whatnot, and how that basically at this current moment, it doesn't really matter because they can run deficits to the wazoo, and they're being encouraged by all the IMF and the World Economic Forum. They're all saying, hey, spend as much as you can because we got to bring this thing back. So here's something I want to share with you that came across my radar literally like an hour ago, and it's just released today from the World Economic Forum. And it says GDP is no longer an accurate measure of growth. So what can take its place? And so the World Economic Forum, the orchestrators of this entire experience, I believe, or the ones that's overseeing it, they suggest something different. And it says the World Economic Forum has created a holistic scorecard to guide policymakers and governments through the post-pandemic recovery. And the 4 measurements they're going to use now, they're trying to get all governments on board, is prosperity, the planet, people, and the role of institutions needed to balance this thing out. So here's their little visual aid here that they are putting out there. Let me actually go back here. And so this is going to be the next, I guess, guide towards how they can globally sustain this current transition or orchestrate it. So here's the measurements here. So GDP no longer important, prosperity, the planet, people, and institutions. So what comes to mind when you see this, Mario?
Yeah, more Keynesian rubbish. In a free market economy with small government and no international globalist institutions, we wouldn't even care about GDP.
Yeah.
We wouldn't care about government statistics. We wouldn't care about CPI because we'd have sound money and things would be, the free market would guide everything. These people want to, I agree with them that GDP is not a good measure, but it doesn't mean to say that their idea is good.
Yeah.
They're heavily involved in this this crisis we've had in the last 14, 16 months. They're heavily involved into this religion of climate change.
Yeah.
And they just want to control people.
Yeah.
It's not going to be any better, whatever they come up with. That's all I can say.
Yeah, and so just real quick, I'll just share some of the things. So a lot of this is being orchestrated as a part of the 4th Industrial Revolution, which they've coined that phrase, and they're dictating, of course, over to the far left. I know you dived into this before, but all the things that are at play in executing this 4th Industrial Revolution. But it says here, the weakness of the GDP as a metric are not just a reflection of the rapid transformation the world economy has seen in this century in the wake of the 4th Industrial Revolution, the climate crisis, and the current health pandemic. But, so the fact, those are the 3 categories they're talking about: 4th Industrial Revolution, climate crisis, and this current health situation. So all things that you just hinted at.
Yeah, they're all their dreams. It's not a reality. We haven't had a true pandemic. I mean, we haven't, because the death rates haven't even for the last 12 months haven't even been that high.
Yeah.
The people who have died from it are like over 80 on average. People who are already going to die, unfortunately.
Yeah.
And I'm sorry, people, that's part of life. You're born and then you die one day.
Right.
And the climate crisis, that's another. They used to call it global warming. Now they can't call it anymore because it's so cold. I saw a little clip on Twitter. Someone put it on. It's snowing today, and I think in Canada, in Toronto, almost in June. So how can you? It's. I'm not saying you have to trash the environment and things like that. I don't think that's right. But to blame human beings for the change in temperature, I think that's being a little bit, it's too much. And the bankers, they're the ones. I mean, I made a video, I think it was yesterday, and I spoke about his name was, I think, it was at the Rothschild in the 80s. He worked with the UN, with a guy called Maurice Strong, who worked for the UN to start this climate agenda.
Yeah.
And they started out in Rio de Janeiro, Brazil, the UNCED conference. And there's a guy called George Hunt. You guys should Google George Hunt, UNCED 1992. And he goes over how, I forgot his first name, Baron de Rothschild, was the main driver, a banker behind this. And it isn't a surprise that you look at the World Economic Forum, the people on the board. You've got Mark Carney, who was governor of the Bank of England, former Goldman Sachs. You got the head of the IMF. You've got Christine Lagarde, the president of the ECB, all on that board, all pushing this climate agenda, all pushing this ESG. I think it's an investment guideline that they're bringing up.
Yeah.
And it's all for global control, globalist control.
Yeah.
And yes, it's hard to try to explain this to people because you are cast off as a conspiracy theorist. Yeah, there you go. There's that's Maurice Green there, and there's George Hunt. Highly recommend this. It just goes over the whole agenda.
Copy. So I'll put this in the chat right now for those that are tuning in right now that can catch it, and then those who might watch the replay, I'll make sure to include this beneath the video, and Mario, so you can share it as well. Beyond this,
what's amazing is that the public buy into this. They don't realize that the people who are behind it are the people who've created this unsustainable consumer-driven society through a fiat currency central banking system. So we're having there you go. Yeah, it's Edmund de Rothschild. Yeah. So you have he's dead already, but he's the guy who kicked it off.
Yeah, and the thing is, the agenda has been set well before now. We still happen to be, and like, for example, I was thinking about, like, before we went on air, I was talking about, we were talking about the silver, and a lot of people in the alternative media making a lot of fuss. They're tagging people, calling out the CFTC, and we got Chris Marcus out there just basically trying to challenge, the establishment. But yet, is it productive energy being spent other than just continue to create chaos and lead to other people waking up? Will it really make a difference in the end? I don't think it will, because the play has already been set. They already know how this thing will unfold. Now, can we rally the troops enough to disrupt this? Will be the agenda, but things are already lock in step. And we were all born into this, unfortunately. And so it's great that we came into the knowledge of being awake and aware to take preparation for ourselves. But I'm not sure that all this fussing and kicking at the door of the establishment is going to really bring down the agenda. But it's worth trying, though, of course.
I think, going after the CFTC and what Chris Marcus is doing, it's interesting, and it raises awareness of how corrupt the CFTC is, how in the pocket of Wall Street it is. But I don't think it will make much difference. The CFTC they're not gonna help us, the small investor. So the only way to fight them is to keep stacking, and that's all we can do. And I think it's possible to bring the system down, the monetary system, by stacking silver and gold. It doesn't seem feasible, but back in 1980, the Hunt brothers and some other people that were involved with them almost did that. They had to let interest rates go up to 20%. To save the dollar, but they were able to stop them because they're playing the bankers game on the COMEX, so they changed the rules. But if we just buy little pieces of silver from bullion dealers, millions of us, not just in the US, but throughout the world, and we keep increasing the network, pretty soon they're going to run out of silver and gold. The bankers, they don't have as much gold as they profess to have. Yes, if you count all the gold that's ever been mined in the world, there's over 10 trillion out there. But official gold is only 17% of that. And I would say a lot of that central bank gold is encumbered through leases. They've lent it out hundreds of times. So they actually probably don't have that much. And that's why they're so... they watch the market so closely, and they try to control, they try to discourage people from buying real gold and silver. They smack the paper price down. What that does is people who are not involved in gold and silver, they see that gold is down, silver is down, and the Dow is up. They say, oh, why should I buy gold? But they don't realize that it's getting harder and harder to buy both of them.
Yeah, very true. And so as you're speaking, just to add in more of the complete control and shenanigans that's being pulled over the world's economy. I wanted to share with you yesterday. Let me see. I'm having issues pulling this up, but I watched a little bit of the. Let me show this on the screen here. I watched a little bit of the banking hearing where they had, the globally systemic important banks all sitting before some congressmen, and they were just basically going back and forth, trying to play hardball, asking why, financial inclusion. How can we include more of the people? And of course, it's all predicated towards this July here in the U.S. They start giving out monthly payments. But just here's more stuff here about the record on climate change, adversity while fighting changes, woke capitalism. So once again, just the headlines itself lets you know that it's all lock and step. They're all working for the same team, and it's not it's not humanity in a sense. You know what I'm saying?
Yeah, I can't see how climate change, working on climate change, can change anything.
Right.
It's ridiculous. what if anything, the fiat currency system we've had since 1971, where there's endless credit, that's what led to so much pollution in the world, so much environmental destruction and stuff. So the first step in the common sense world, not led by globalists, would be to go back to sound money. And I would think there would be a lot less consumption in the world. A lot, resources would be allocated more, more in a free market way, more realistically. And the world would be a much better place, you see. But they want to divert attention. And like you said, they're really pushing this agenda, and they're working together. There's a lot of powerful people. You've got the Bank for International Settlements. You've got the UN, which is owned by the bankers as well. You've got the IMF. You've got the Federal Reserve, the Bank of England, all the big governments. They're all behind it. So it's really tough. So the only way to keep fighting these people, and it's not going to happen overnight, is to keep taking away their financial wherewithal, and that's by stacking. I think it seems it seems a faraway dream, but I think it's possible.
Right, I do agree, and I preach the importance of creating your own financial sovereignty by literally redeeming some of your fiat currency notes. Like if people really took a deep dive down the historical journey to this point here, where we're being led down the digital pathway, that their greatest fear, I think, the establishment, those that are trying to orchestrate this, is that people get wind of lawful money at a time where they're trying to rebrand and restructure their current legal tender structure by taking it solely digital, by removing the last line of offense and defense we have is paper. Even though paper is being destroyed, it's still something physical and tangible. And I really be harping on this, is that there's no way they can pull up the greatest monetary heist in humanity or in human history unless they have something to dangle between you and the future, and it happens to be this digital asset space. Like I will not go away from that, because how can you get people to willingly accept the idea of not owning something tangible other than the allure of I'm profiting off this transition because I'm becoming a Shiba billionaire, and so ultimately you're going to go back into dollars or pounds or whatever to hopefully buy real things, and that's a way of using the system for your advantage. That's just my opinion there, Mario. But let's talk a little bit about. Let me pull this on the screen here. The boom in the commodity space, and so commodity prices. What's going on with that? Like why is there such issues with China outside of just their credit issue there, but the business under pressure from rising commodity prices? Is it a shortage or what, or is it a forced price asset appreciation situation going on?
I think it's because you've had the pickup after the lockdowns, especially also in the U.S. and the Chinese economy is picking up again as well. And I think there's a lot of easy money, a lot of speculation. So Chinese outside mining companies and companies that benefit from higher commodity prices, other companies in China that produce consumer goods, they're starting to suffer. So the Chinese government is worried because that could translate into higher consumer prices. Right now, I think it's only rising by 1%. And the other thing is the United States. I mean, yesterday was 6 trillion. It could be next year. It could be another 10 trillion. That's the more and more dollars you create and the more you print and borrow, the more commodity prices are going to go up, because a lot of commodity prices are still priced in US dollars. But I've noticed now that maybe a strategy that they could be following, the Chinese, is by revaluing their currency. I've noticed that the Chinese yuan has risen quite a bit. The US dollar has dropped. I think last year we were $1 used to buy 7.2 Chinese yuan. And this right now we're below 640. So that's a pretty big drop. So that might help China with it might make the commodities a little less expensive because the yuan will be stronger versus the dollar. But at the same time, it's going to hurt their exports. So it's a difficult thing for them. But it's also going to be difficult for everyone else. My wife went shopping yesterday, the weekly or 10-day shopping she does. And she said she noticed, things are, she didn't buy as much, and it was more than usual, the price.
Yeah, so same thing over here. And so I personally attempt to try to keep an eye on the actual price of goods and services that we use on a frequent basis. And it's no hiding it. But yet, once again, the mainstream narrative is always that it's temporary. And the fact I think it was Yellen yesterday mentioned that it'll be done by the end of this year. Like, inflation numbers, it'll Q4, whatever, things will kind of settle down a little bit. And I'm thinking, like, how exactly would they be able to lie like that and pull that off?
Is that the same woman who said that we about 18 months ago, she said there wouldn't be another financial crisis in her lifetime? So there you go.
So just the overall cost of living these days is going up, and there's no rational explanation for it other than the fact our monetary system is dying. And so I've been really focusing lately, this week in particular, with the argument out there. And I think I'm not sure we talked about this before, but the argument of deflation, inflation. And so I actually saw something about how QE could be causing more harm than good, because with this reverse repo situation, the market has been flooded with excess liquidity that's not needed. So they're pumping it back into the Federal Reserve's coffers by lending it to them at 0% type of thing. So they're basically
they keep doing it overnight.
Right. So
they every day. Yeah.
So with that being the case, because the currency that's been parked hasn't really hit the street yet, Jerome Powell's made it obvious that he needs help with, i.e. fiscal policy. So here comes Biden and Trump prior to 2 trillion here, 2 trillion, 2 trillion, 2 trillion. So that's the fiscal side of things that's really causing the spike in prices, because that's the currency that is making it out. But yet all the activity behind the scenes in the banking sector, by them just washing the currency back and forth, is that really causing, is that leading to inflation as well? Because it seems like they're hurting themselves more.
If they come out with more fiscal stimulus, that's going to have to be financed by even more QE, because the Fed needs to keep interest rates low. And for me, the inflation deflation debate is very simple. I look at inflation as the creation, the growth of money and credit out of thin air, right? And we've had that continuously since the Great Depression. We have periods where it drops during recessions, but they pump it back up right away. They don't let the money supply drop, and that's inflation, the rising money supply, and it usually results in rising prices. They've been able to keep it away. Not really, they lie about it really with the CPI, but a lot of this inflation has gone into asset prices, stocks, bonds, real estate. I saw now Rolls-Royce is going to produce a limousine where you can put a table in the back and drink your champagne for 20 million pounds. I mean, it's crazy. That's another sign to me that things are crazy. But and deflation basically, is when you shrink the money supply, and it usually results in lower prices. You can have higher prices in a deflation.
Now watch this. Sorry. What about the shrinkage of the money supply? So how about with all the non-performing debt that's expiring and then just going poof. Like the fact that there's a lot of debt now since the lockdown that is not being paid upon. So those debts are actually, because the banks basically extended it out of nowhere. And so they can write it off, I guess, in some capacity. So what happens to all that stuff that might be taken off the books or whatever, or not reported?
Well, that writes off, that extinguishes a lot of money out there, because that nowadays a lot of the money is created when the bank loans money to companies and consumers. But I bet you the Federal Reserve will probably come to the rescue. That's what they did last year. They're starting to buy corporate bonds. They're starting to buy bond ETFs, and that's what the Fed does. And also that's probably why they want to do another $6 trillion a year of spending. That will help cushion this. Yeah.
Now watch this. So to add on to more of this inflation deflation, because if we're experiencing, according to their numbers, 3.6% here, 4.6% there, and that's just recent activity measure over the last year or within the last month. But yet John Williams Shadow Stacks and the other measurements, 7, 8, 9% has been there for quite some time now. And of course, the currency has been, steadily, the mandate is 2%. So that's automatically 2% of theft every year for the most part that they want to achieve. Now, what happens when the monetary velocity, which apparently, according to their measurement, is at a historically low number here. So a lot of people are still sitting on something. The currency's not moving. What do you think can get this number to move to where it'll?
I personally don't look at velocity. There's a lot of people out there, and they've been proven wrong because they said there wouldn't be rising prices because velocity is so low. But it's not true, because we saw today, PCE is almost at 4%, the headline number. The reason why that ratio, the money velocity is so low is because you've had such a huge creation of money, M1 and M2, that the GDP hasn't grown as much. So that's why it's dropped like that, because I think it's GDP money supply divided by GDP, how many times it moves. So it's normal, and a lot of that money supply, the reserves, are staying in the excess reserves with the Federal Reserve. But at the same time, you've got all this government checks going to people who don't work, and they're buying things that are not there. You've got the supply chain problems as well, creating shortages. The lockdowns have created havocs, as we saw from that chart of the charter prices in Europe for shipping. Everything's a mess.
So the monetary twilight zone continues on. So Mario, let's open up and take some questions to get some thoughts, some insights. What else, for those that are tuning in, what have we not touched on that's relevant to all this, past week? I'm sure there's a couple stories we're missing. So feel free to chime in via the chat, or you can call in, and so I'll put the number on the screen right here if you guys want to use this number here, and call in, let your thoughts be heard, or share a comment, share a thought, and highlight at Rethinking a Dollar in the chat. It'll stand out and we'll jump on it. And so we can go from there. And so I think, one of the things that was brought to my attention, I'll wait for somebody to call in if they do, is how the cryptocurrency space, it has become a vehicle that has absorbed a lot of this currency as well, which prolongs the lifespan of fiat currencies, because people can buy these digital assets, and it absorbs to where it prolongs the idea that they can continue to print, because the money is just transferred into these digital assets that people buy and hold and sit on and whatever. So I'll share your thoughts on that in a minute. Let's get this call. Hello, caller. What's your name? Where you calling from?
Hey, Mike, it's low blood pressure, Corpus Christi.
LBP, how you doing, man? What's on your mind?
Hey, man, thanks for letting me on the show. Look, Mario and Mike, I'm confused because, say the bank lets you borrow the money, right? And you guys are saying if the debt is wiped away, then the money supply will shrink. But when that bank loaned that money, there was a receiver on the other end who got that money. Like, say you buy a house, the seller gets that money and spends it into the economy. So when you shrink the money supply, when you shrink the bank note, how does it shrink the money supply if that money has to be earned by the worker. Wouldn't it increase the money supply? Because now instead of paying that debt, the worker, the money he earns, now he could just go blow it off on Taco Bell or whatever the hell he wants to do, you know?
Yeah, good point there. And I think if the money, because it's just a digital ledger transfer at that current moment. Now the person then takes it and turns it into fiat cash, or they swipe and put it out, you know, as far as buying real consumer goods, then I think it'll show up. But most of the times I think people just transfer and they'll either park it or they'll put it into something else that remains in the bank. So it might not ever actually leave the bank, probably.
I think what happens as well, low blood pressure.
Offline.
All right, sorry about that. Go ahead.
So I think what happens as well is that the bank's balance sheet, when that loan, let's say defaults, for example, the balance sheet will shrink, and the bank will be able to lend less. So that's how it works. Of course, the guy who got the money already or spent it already into the economy. But if you have too many defaults, the whole banking system could collapse, and they'll be unable to issue more money, more loans, and the money supply will shrink.
Okay. All right. So let's take another question here. Hello, caller. Which name are you calling from?
Hey, what's up, Mike and Mario?
How you doing?
Jonathan Baffy. It's Jonathan Baffy. I'm from New York.
Jonathan from New York. What's on your mind, my friend? Give me a quick thought or a question.
Yeah, it's you know what it is? It's I'm so confused with the whole crypto and what I have on my mind is this. You know how the Federal Reserve was pretty much a play on words back in the day in 1913?
Yeah.
And Satoshi Nakamoto or whatever, the person who wrote the code of blockchain or whatever it's supposed to be.
Yeah.
What do you guys think about the theory that it's the central banks again trying to get everybody comfortable with utilizing this and this kind of like cryptocurrency for everybody to use?
Yeah.
And also the fact that blockchain lives on the internet. And I don't know if you guys are familiar with DARPA, but apparently they're the ones that created the internet.
Right.
So I'm not sure if there's any relation or if you guys are kind of connecting the dots to what I'm saying.
Yeah.
But it just seems fishy to me.
Okay.
I wanted to get your thoughts on that.
But we'll answer that off air. Thanks for calling in, my friend.
Awesome, man.
Yeah. Mario, what are your thoughts on that, buddy?
Yeah, I think there's a big possibility that what Jonathan said is right. You know, and I think there were studies or research done by the NSA in the 1990s about cryptocurrencies. And I've also heard from Catherine Austin Fitz, who knows quite a bit, who's been on both sides. You know, she worked for George Bush Sr. She was undersecretary of HUD.
Yeah.
And now she's outside the system, and she thinks cryptos is like controlled opposition.
Yeah.
So I kind of I can't prove it. That's one of the reasons why I'm skeptical on Bitcoin, is because we don't know who Satoshi Nakamoto was. And do you really? Yes, the white paper is really good and everything, but there could be some kind of I don't know. There could be something that would that's not good about that.
Yeah,
I don't believe in
coincidences. I don't believe in coincidences at all, and I think the fact that well before the internet, there was the talk of a world currency on burning paper, and then of course there being a coin. Now symbolism, how can we relate that, or is it completely disconnected? I don't know, but one world currency I know is a long-term objective, and so how do you get that? What better way to use that than technology? And so I would connect all the dots together and just assume that this is all a part of their plan, especially as we mentioned earlier, that all this has been well scripted out well before we were born. Like all those Bilderbergs and Davos and all those secret meetings and the bloodlines and stuff like that. That stuff's been in play well before my time. You know what I'm saying? I just happened to catch this after the 80s and I jumped on board. Now here I am rethinking and questioning everything I was ever taught and told, knowing that the education system was against me. Everything we've been taught and told is a lie. And
the education,
the truth. Go ahead.
The education system. There's a good person to listen to. Charlotte Izurby, I think you spell it Iserbyt, Charlotte Izurby, and she worked in the Reagan Department of Education, and she's come out and said that the educational system is there to dumb people down.
Yeah.
Her dad was actually a member of Skull and Bones, so she knows what she's talking about.
Yeah.
And as to that Economist cover, that was in 1988. And some people talk about the number 33, which is like a big number for these kinds of globalists.
Yeah.
And if you add 33 to 1988, you get 2021. So
yeah, definitely no coincidence here. So here's a picture of Charlotte Izurby here. So
yeah, I really recommend you watch that. People watch that. She'll go over about the educational system, how it was there. She had to leave the Department of Education because she said, what are you doing?
So yeah, so it looks like the book here is The Deliberate Dumbing Down of America. So no doubt there's some nuggets in there. So but yet the cover, the Economist cover was definitely not by coincidence. And then the follow-up cover, which took place, it was a couple weeks ago, was it May 20th or something, where it talked about the government coin, like, the government coin. So you take this coin, that new Economist cover, and the fact that the Rothschilds are share owners in the Economist. They used to be, I think used to be majority holders of it a long time ago. But there's a lot more to the story than we're being told. So, but hey, Mario, man, with that 40-minute mark, I want to respect your Friday evening over there, I believe it is, and I have the rest of that day in front of me, and it is my birthday week celebration. So,
when is your birthday?
I can't say. It's not disclosable information there, buddy. So, but no, it's sometime this week, which is a holiday week over here. So it's Memorial Day weekend. So it always comes at a time where there's my birthday, then there's party celebrations, and I just lump it all together, man. So, but once again, everybody, thank you for hanging out with us. I hope you guys enjoyed the Mike and Mario show. If you have, click the thumbs up button, share this, and then also if you're new to the channel, make sure you go over to Manico64 and subscribe over there because Mario does a good job every single day educating the world. Let me actually pull it up here so people can see it. Then Mario, leave us with some kind words or whatnot that you want to leave the viewers with at this current moment.
Try to avoid distractions in the world, like politics and geopolitics, gossip, and focus on yourself, your family, and try to stack a little bit. I would say gold and silver. If you're lucky enough to be able to save extra fiat currency.
Yeah. Now, here's the thing. Like, it's not a matter of, this is my opinion. It's not a matter of if you can. It's a matter of if you realize the severity of what's going on around us, then you'll find a way to go get you an ounce of silver at the very bare minimum, on a frequent basis, just because that is the best form of savings that you can actually have because it is real money. Now, if you're a high net worth individual, then of course you could probably go out and buy you a couple bars as well as a couple bars of gold. But your average Joe at this current moment, everybody can go down to the local coin shop and buy an ounce if they wanted to. But it requires sacrifice. But you got to know how important this is because this is a historical event we're all experiencing. But here's Manico64 on YouTube here. Definitely a good educator. Go check him out, subscribe, show him some love over there. And then other than that, Mario, it is always a pleasure, my friend. Looking forward to doing it again next week, Lord willing. And people, be blessed, be safe, and I will see you later. Hang on there, Mario. Gotta find the exit song. Gotta find our exit song.